Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Friday, December 16th. Investors on Wall Street and around the world seem to be shrugging off a downgrade of several large global banks. Stocks across Europe are straddling the break-even line, and the major U.S. indexes look set to follow up some modest gains yesterday with more of the same today. Right now, traders are digesting the latest data on consumer prices, and we'll bring you those numbers after the opening bell. Economists were predicting slight increases in both the overall CPI and the core rate, which excludes food and energy costs. Yesterday, inflation at the wholesale level came in a bit higher than expected, due mainly to a surge in food prices.
In the equity markets, we'll be keeping an eye on financial stocks, following some high-profile downgrades. Fitch cut the issuer default ratings and viability ratings on Bank of America, Barclays, BNP Paribas, Credit Suisse, Deutsche Bank, and Goldman Sachs. The firm also downgraded just the viability ratings of Morgan Stanley and Societe Generale. Banks on both sides of the Atlantic are said to be heavily exposed to the sovereign debt of struggling Eurozone nations. Concerns about the debt crisis pushed the euro below the psychologically important 130 mark against the US dollar earlier this week. But today, the euro is regaining some of that lost ground. Commodities are also rebounding from their recent sell-off. Gold is back around $1,600 an ounce, but it's still down about 7% on the week. And crude oil is rising back near $95 a barrel.
On the corporate front, the biggest internet IPO since Google in 2004 is about to hit Wall Street. Social game producer Zynga priced 100 million shares at $10 apiece at the high end of their expected range. The pricing gives Zynga a total market value of just under $7 billion, above many traditional game publishers and at about the same level as Electronic Arts. Zynga makes games played primarily over Facebook, such as Farmville and Mafia Wars. It will trade on the NASDAQ under the ticker symbol ZNGA. We also have a big M&A deal to tell you about. United Rentals is buying rival RSC Holdings for a total of $4.2 billion, including $2.3 billion in net debt. The price tag represents a 58% premium over RSC's closing price yesterday, and those shares are jumping more than 50% on the news. United Rentals is gaining more than 5%.
We're also seeing some big gains in shares of Adobe Systems. The software maker is up nearly 5% ahead of the bell, after posting fiscal fourth quarter profit and sales that topped expectations. Adobe's earnings were actually down from the same period last year, but revenue jumped 15% thanks to strong performances in the digital media and digital marketing businesses. But one technology stock moving in the other direction this morning is Research in Motion, down 11%. The maker of the BlackBerry line of smartphones said that its earnings in the current quarter will fall well short of analyst forecasts. Research in Motion also said phones based on its new BlackBerry 10 operating system will ship later than expected next year. That's the latest from Weiss Research. We'll be back after the opening bell with all the market-moving news, including that report on consumer prices.